Morning, everybody. Morning, FTNet. Morning, Evil. How are we doing? Say hello if you're here so I know how many people we've got. If you're watching on replay, don't forget to leave a comment if you've got any questions on anything we cover, or obviously come into Discord. I'm going to do a quick analysis this morning of news, and obviously I'm trading the indices this morning as well, just before we do the stuff that we're going to cover today. So today, basically, there's a trend pullback strategy that I've been working on that I'm going to cover and look at some system parameter permutation tests that I've done with it. And going to look also today at Phil's lazy trader strategy, because the new version of the EA that I released, obviously, as we found out, there was a problem with fibs. I spent all day yesterday doing tests on that. So I've got all that data to go through. I haven't actually looked at the data yet. So we'll be looking at the data and analysing it to see how good it is. On first glance, it looks really good. But I'll go through that today as well. But to start off with, obviously, we've got news today. So obviously with what's gone on with Trump, getting back in the markets, as you can see, again, pretty volatile already today. We've had a lot of ADRs hit on the Australian pairs, New Zealand as well. So all the New Zealand and all the Aussie pairs overnight have had a lot of volatility. US dollar CAD has also hit ADR. Obviously, that's not Aussie or New Zealand based, but crazy. Yeah, just I'm not trading this week, basically. FX, my plan is basically just to watch what happens this week. See where the market ends up. Obviously, this was the run up to the election. This was the election. If we end up back to kind of where we started, somewhere around here, for example, on the US dollar CAD, we know this is all the volatility and it's just craziness over. So we can then reset on Monday. Give Trump this week and the weekend to say stuff, because obviously we know the Trump phenomenon. Every time he tweets, we're off somewhere. So let him get everything out of his system, hopefully over the next few days, announce what he's going to do, what his plans are for Ukraine, what his plans are for Israel, just get some news out the way from him, let the market calm down. Then Monday, hopefully we'll be back to normal trading conditions. But obviously for the next couple of months before he actually gets in, there's going to be a lot of focus on him. So a lot of volatility, I suspect, but we'll see. So that's the plan anyway. So I'm just letting this week play out. The only thing I've got on at the moment is the Swiss yen, which I've got a short on, and I've been stuck in this now sideways for 5 days. It's not going anywhere. So if I can get down to these lows again today, if we can get a drop towards ADR, I'm going to scrap this and get out and just take the break even on it, because I'm going to need to get down to sort of, because of the swaps, I'm going to need to get down to here somewhere just to get a break even on it. But I'd like to just be out of it, so I can reset everything basically. So yeah, ADRs as loads today. There's a load of RSIs, but obviously it's all to do with that volatility. Morning everybody else. Morning Vitali. I have an idea about the lazy trader EA. Cool, fire away. Morning Mark. Morning CK. Started yesterday evening doing some tests on the lazy as well. Normal unprecedented times trading. Yeah, it's just no point. I mean, there is a point. You can make a lot of money, but you can also lose a lot of money. And obviously, I don't really trade stop loss strategies much. So I don't want to get into position trading strategies with this kind of volatility going on. If you look at something like the Euro US dollar, I got a feeling we're going to be back up here by Monday, but we might not. And if we're not, I don't want to get into a position long and then just be stuck in drawdown down here. It's just no point. So it's just let the market, give it 3 or 4 days of, right, we'll calm down and then off we go. So business as usual next week. So today, obviously, big day. We've got the Bank of England monetary policy rates, 4.75. We're expecting a drop. Don't see any reason why we shouldn't get that. I doubt we'll get anything different, but you never know. So the market potentially could weaken off of the back of this, but we just don't know what Trump's going to do now with trade negotiations. It could be bad. It could mean that we need to be slower with our reductions in interest rates in the UK. There's all sorts of ifs and buts now with Trump getting back in. So I think the market's probably going to want to keep its powder dry a little bit and not do too much speculation, because we just don't know. He hasn't announced anything particularly yet. So we've got Bailey speaking at 12:30. So we have got the press conference at 12:30. So the market will probably get going around about 1 o'clock if it's going to do anything. Morning, Forex. We've then got unemployment claims, 1:30. So every Thursday we have the US unemployment. And then we've got FOMC this evening at 7 o'clock, 4.75. And we've got the press conference. So somewhere between 7:45 to 8:15, that will kick off. No idea. Everything changed this week. So we'll see what the Fed says. We've no idea. With what Trump usually does, it usually causes rises in interest rates. However, we're very, very high. It's really hard to tell what the markets are going to do, what the central banks are going to do with interest rates. So these are quite key today, especially what Bailey says and what Powell says, because I don't think at the moment they can really put much forward guidance in, because we don't know what Trump's going to do. So it's going to be a tricky one today. So again, just going to watch, let it play out, see what they do, see what they plan, and then we can go from there next week. And then tomorrow we've got Canadian unemployment. So that's your news. Overnight wise, not a lot. We've had a few bits of German news, but nothing particularly exciting. So there's your overnight news. DAX clean break long, FTSE hedge this morning. So yeah, I mean, all the volatility we had yesterday, obviously, on the election, don't see any reason why we shouldn't get a pullback, potentially up to ADR today. So this propulsion move down, see if we can get a gap fill on that to the upside. So quite like that today. Obviously, if I get the break on that, this is going to pay for the hedge. So it'll be a profitable morning if the DAX rallies. If not, I'll deal with the hedge on that later. So 5R is below everything, isn't it? Down there. It's not a bad support, I guess. That's probably worth leaving in place. Upside propulsion gap fill. Just going to leave those in place for the minute. Hope that that gets a nice clean run up. If that gets a clean run up to 5R today, it doesn't really matter what happens with the FTSE. So I'll leave those running. Right. So I'm not going to do a lot of FX analysis this morning. There's no point. So if you want to look at any pairs, though, if you're in any positions, you want to look at anything, let me know. But today is looking at other strategies. So we will do that. Morning, everybody else. I think I've said hello to everybody now. Let's try turning this into a time-based stop strategy. We enter with a large lot size and aim for small profits. My initial test shows some potential. You'll have to give us your settings. We take only one trade, so it's not a position trade, with a lot size of 4 and an ADR profit of 0.125. We exit after 2 hours, regardless of the outcome. We can try that. We can try it on Aussie CAD, obviously, but you've got to have it working on everything else. If it's going to be a sustainable strategy, it can't just be on Aussie CAD. It's not. You can't have a strategy that just works on one thing. So we can try it. But first of all, let's look at the other strategy. So which terminal did I put that on? This one or the other one? This one, I think. Yes. Okay. Right. So this strategy, it's a little bit like what we've been looking at with. Is that the right one? No, wrong spreadsheet. Pull back that one. So it's a little bit like Phil's strategy, basically the lazy trader one, in the fact that basically what we're doing is we are analyzing if we've got an up day or a down day. So I'll quickly run a visual test to explain the strategy. Run on the hourly time frame. So what this is doing, let me run it on tick so that it's slower. Probably not best to test it on Euro US dollar, but it doesn't matter. So what it's going to do is we're going to analyze basically what the daily candle is yesterday. So in this case, it was a bull candle. And if it's a bull candle, what we're going to do is we're going to look for a pullback and entry. So with a trend, the way trends work is obviously we push up, we pull back, we push up, we pull back, we push up, we pull back. It's market structure. Yeah. The pullback is somewhere. Yeah. But if you are going to have a trend, the definition of a trend is that you have a higher low and a higher high and a higher low and a higher high and a higher low, etc., etc. If the market pushes up and pushes down and makes a lower low, it's not trending. Simple as that. So that's a trend. You can't describe it any other way. It's market moving in one direction, zigzaggy. So what this EA is doing basically is if we get a bull day or a bear day in this case, bad example. Let me just quickly reset the settings on this. One sec. There we go. So what this is doing basically is when we get a day, whatever that day is, let's say it's a bull day like that. Yeah. What the EA does is at 11 p.m. Chart time, which is 9 p.m. UK, it looks as if it's a bull candle. And then it says, okay, has price closed? So this is bull. Has price closed within a certain percentage of the high of the day? Yeah. So we've got here a price must be within this percent of high or low. And I've got it set to 20%. So what we want is price being up here somewhere so that we've got a nice big bull candle, but we're closing somewhere high. When that happens, what we're going to do is we're going to measure that distance. So ADR 1. And then we are going to place a pending order at a percentage pullback. So a little bit like a fib, but we're using ADR. So the multiple of ADR for pullback entry is that entry there is set to a quarter. So if we have a bull candle like that, price closes within 20% of the high. At that point, we're going to say, right, place a pending order 25 quarter of an ADR away from where we are. And what I'm expecting is if we're going to continue the trend, we're going to pull back and run. So I'm going to get in a quarter of an ADR on a pullback. That is a variable. We can adjust that to half, third, whatever you want it to be. That is also a variable. So we can decide how far up that candle at 9 p.m. we need to be to make it a viable trade. And then we've got a number of hours to cancel the pending orders. So what I want to do is I want to say we've got a bull candle. If we're going to continue the trend, set that pending order. But if it does that, cancel that pending off after whatever, 23 hours I've put. So basically it's just a little bit less than a day, because obviously tomorrow we're going to repeat the process. So that's basically the logic. And then we've got a trailing stop on it as well. So it's using, let me just load the set file. What did I call the set file? That one. Yep. So it's using a trailing stop of half an ADR. So what we're going to do is if we get the pullback entry, we're going to have a stop loss below the low. So it uses stop loss strategy. Yeah. So it uses a stop loss. It places a stop at the low. Morning, Lucas. You've just shared the set file in Discord, Vitaly. Okay, cool. And then as it trades away and the trade works, so we trigger our order and the trade starts to work, we trail with half an ADR. So basically the idea is we are using a stop. Either this trend is going to continue or it's not. If it doesn't, I'm out. Yeah. If it does continue, we're going to let a trailing stop take us out. So we're going to hope that this trend continues. And I also have a TP set at 1.5 ADR. So basically what we're saying is we're going to get in, we're going to pull back, have a small stop, and I want it to move 1.5 ADR in our distance, in our direction. If we hit target, great. If not, get me out on a trailing stop if the trend doesn't work. So that's basically the logic of the strategy. So let me just see what this is set up to. 20 and 25, cancelling after 3. So let me just set that to defaults quickly. Put the trailing stop on at 0.5. Just to demonstrate the basics of the strategy. And target was 1.5, wasn't it? Where the hell's target gone? Targets. Okay. Delete stop losses, false. Right. So we'll just watch this play out quickly so you can see what it's doing. Okay, so there we've got a candle which is a down day. Yeah, at 9 p.m., which is this candle here. Let me zoom in so it's easier to see. So down day, this is the 9 p.m. candle. Okay, what we've done is we've closed within 20% of the low, and we've basically put a stop, a pending order, a quarter of an ADR away. Yeah, our stop loss is at the high of the day. So if this is going to continue the trend down, it's going to pull back somewhere without invalidating that high, and then it's going to continue on its merry way. Yeah, and we've got a TP set at 1.5 ADR. Yeah, so your stop is always going to be a variable. Yeah, this is going to be a different distance every time, but your TP is always going to be the same, 1.5 ADR. So if the trend is going to continue, it's going to go. Yeah, so we'll see if this one gets triggered. There we go. So we triggered, we're trailing. We stopped out. Yeah, so successful trade. Didn't hit TP, unfortunately, but it triggered the entry at a quarter of an ADR on a pullback. So we'll let it play out and do another trade. Okay, it's not finding any new trades. So the reason it didn't take a trade here was because that time there, that was more than 20% of a pullback. So it already pulled back more than 20% on today's price action. I want it to close high so that it needs to pull back before it continues. Yeah, that's the whole premise of trend strategy. We're basically wanting a big, strong daily candle, and then the next day we're going to get in on that wick of the next candle before it pushes up. So again, here we got a nice big down day. We've closed at the lows pretty much. So we're looking for a quarter of an ADR pullback, stop above that high. You notice the difference in the stop. It's actually pretty similar actually today. But the stop will be variable, obviously, because it depends on how far away we are from the high of the day. So that one didn't trigger. So at the moment it's set to cancel that order off 23 hours later. Then we obviously do an analysis again. This was too far away, so no entry on that day. And again, these are all variables that can be adjusted, the distance from the high or the low, etc. So let's wait until we get one there. There we go. So big bull day, looking for a 25 ADR, quarter of an ADR pullback, didn't get it. So we carry on. Now that happened to carry on, but obviously it hardly pulled back anything. Again, another one there, didn't manage to get a pullback on it. Pull back on that one, off we go in a trend. Small, tiny little profit because we had basically pretty much an A-shaped recovery on that day, unfortunately, but probably will go off the target. And again, trailing stop is a variable. Obviously, we can adjust trailing stops. There you go. If we hadn't used a trailing stop of half an ADR, that one would have hit TP. Where did we get stopped out on that? There. Really unfortunate. So again, we're using half an ADR. If we went to a 0.75 ADR, we wouldn't have got stopped out. You know, these are all things that can be adjusted and tweaked. So let's just do another example. There we go. So pull back. Yeah, that worked. Okay. Target hit. Yeah. So that's the strategy basically. That's the basis for it. So as you can see, obviously that's only taken a couple of trades, not really done a lot. But the idea is this is for yen and Swiss pairs. So what I'm going to be doing, especially now we've got Trump in, is I'm going to be adding a lot more diversification into my portfolio, basically. So I've already got the SIH trading the indices, position trading on FX. I'm not going to do much position trading, I don't think, on the Swiss and the yen pairs because they've not been very good. So I'm probably going to remove those from the portfolio, but replace the yen and the Swiss pairs with a trending strategy, and this is the whole idea behind this. So this is a strategy that I've used in the past, and I was taught a long time ago. But when I first traded this strategy, I didn't know what I know now about how the market moves and everything. So I'm revisiting it basically because it's just been re-sparked in my brain by Phil's strategy, because it's basically a fib pullback strategy, but it only works in trending market conditions. When you go into range bound market conditions, the strategy doesn't work. However, in range bound market conditions, you don't get very many strong bull and bear candles that close at the highs. What you tend to get is a lot of candles that look like that, yeah, in range bound markets. In trending markets, you get a lot of strong closed candles, and strong closed candles are part of the reason why we're trending. So it's identifying these candlesticks which is actually the key to the strategy. So that's basically how it works. When you put it on a pair like a yen pair, if I just put this onto control points so that it can run quickly, I don't know if this is the best settings or not at all. We'll look at the spreadsheet in a minute of the testing that I've done so far, but basically you see if it trends, you get some very nice big winners. Now, one of the things you'll probably notice, or may not notice, but I'll tell you anyway, is there is no moving average filter being used here at all, because the market trends in both directions. So this is running also on the hourly chart, because obviously we're looking for an opportunity every day at the end of every day. So it needs to run on an hourly or a 30-minute chart. But those are the ones you're going to get decent money on if you get the pullbacks in them, yeah? So that's basically how it works. The initial testing that I've done has been pretty good. Let me just move that over so you can see. So it's pretty good, because obviously we know that the yen and the Swiss trend very well. So it works very well on those instruments, yeah? But when we get periods where the market doesn't trend, obviously it stagnates. Likewise, if you're using a mean reversion strategy and the market goes into a trend, your mean reversion strategy is going to stagnate. So the idea of adding this into the portfolio, or something similar into the portfolio, is if the market is stagnating and market is range bound, our position trading strategies and our mean reversion strategies are going to pay out. When the market goes into a strong trend, this is going to pay out. Yeah. So trending market, range bound market. But you see, in a range bound market, it doesn't lose, because during a range, you're doing that. You're having micro trends, fractal trends within the bigger picture, yeah? So it actually doesn't lose money during ranging conditions, because it is actually able to trade. If you add a moving average filter to this, what I have found is that these actually turn into losses. Yeah. So, you know, everybody says the trend is your friend. What does everybody measure trend with? Moving averages. If you actually apply a moving average to a trend-based strategy, it filters out half the winners. Yeah. So there's no moving average filter. Again, we have a moving average filter, so that could be tested. But so that's the strategy. Very simple. So it's daily time frame, looking for a strong closed candle like that. Yeah. Perfect example here, look, yesterday, massive strong close candle. The close there at 9 p.m. was within 20% of the low of the range. So what we would do is we would be measuring a quarter of an ADR. The ADR, right, so just to clarify, the ADR on this is calculated on the candle of the day, yeah? So you can see here I'm using a ADR 60, and the candle to calculate from is candle 0. So this is triggering at 9 p.m. and it's looking at today. Candle 0 designates today's candle. So we're measuring today's candle at 9 p.m. So we're not using ADR, the average daily range. We're looking at this, and we're looking for a 25% pullback on this, or a 50% pullback on this. So in this case, today, or rather if this had been running yesterday, here we would be looking for a 25% pullback on 258 pips. Gonna need it. 258 times 25% equals 64 pips. So we'll be looking for a 64 pip pullback from that 9 p.m. candle there, which is here. Yeah, so we'd be looking to pull back to around about there. So that is where my pending entry would be set. Yeah, my stop would be up there. So we're giving the thing plenty of room to breathe, because if this is going to continue to trend, we're not going to invalidate that high. Because if we invalidate that high, it's a V-shaped recovery. Yeah, if it's going to continue to move down, i.e. trend in the direction of this candle, it cannot hit that. If it does, the trade is invalid. We stop out. Yeah, but if that happens, we're going to need to get at least a pullback to there. Now you can vary that, and you can say, you can pick any distance. You could pick 50%, 61.8, whatever you want. So the idea of setting this up to use the daily candle range of what we've just had is that whatever figure you put in there is a fib ratio from 9 p.m. to the open. Yeah. So that's the strategy. The testing that I've done so far is not a lot. Well, it is actually, it's quite a bit. That's a lie. So you can see down the bottom here, I've got all the FX pairs basically. So I've tested all the yen pairs and all the Swiss pairs as a priority. Yeah, because obviously a trend-based strategy should work on things that trend more than they don't, which is your Swisses and your yens. Didn't get too far into testing yesterday, but I tested Aussie CAD, Aussie New Zealand, Aussie US, Euro Odd, Euro CAD, Euro Pound, and Euro US Dollar. So I've managed to get those tested. The Aussies, not very good trenders, very range bound a lot of the time, commodity pairs. But I'm going to go through the rest of the testing just out of curiosity. But if you look at the pound yen, so I've run 480 permutation tests. Okay, so what I was testing was the maximum wick. So looking at the inputs. Yeah, and get the spreadsheet up. So the test that I'm doing is looking at the maximum wick, which is this input here. So the price must be within a percentage of the high low. So what is the best percentage? And I've tested from 10%, was it 10%? No, 20%, from 20% to 50%. So what I'm saying is you can pull back 50% on today and then place your pending order. So we are looking for basically a very small stop. You're going to get a lot more trades the higher this number, yeah, because obviously you're giving it more room to wiggle. So you know, the results will be very different, obviously, depending on the wick size. So that's the first thing I tested. The second thing was the ATR stop, basically, which is the pullback distance. Yeah, so the multiple of ATR that we are going to pull back from that high. So testing in 0.2 increments, testing from 0.2, which is a 20% pullback, in 0.1 increments. Yeah, so I tested that. Also tested the pending expiry, which is here. So I'm saying I want the pullback to either happen today, or I give it 2 days or 3 days. Yeah, so I want you to cancel the pending order off tomorrow at the same time, or give it 2 days to play out, or give it 3 days to play out. Because sometimes what happens is you get a big candle, and then you get either a flag or a little sort of accumulation, and then it pulls back, and then it goes. Yeah, so it doesn't necessarily happen the next day, because it could be a big propulsion candle, and obviously to make a propulsion gap the next day, we're going to need a wick which is somewhere around about here. So I'm giving those opportunities as well to see if it's better to wait a few days. And then the TP distance. Is it better to target a tiny TP of half an ADR? So look for a quick scalp within the trend and then get back into the trend multiple times? Or is it better to go for a big long one using the trailing stop of half an ADR? So that's basically what I've basically put into place. So so those are the tests that I've done. And as you can see on the pound yen there, we got 388 out of 480 tests passed, which is pretty good. So it's about 80%. Is that? What's that? 500. So it's roughly 400. Yeah. So around about 80% of the tests passed, which is good. US dollar yen passed roughly half of them. New Zealand yen a little bit less, past 185. 315 passed on the Aussie yen. 311 out of 480 on the CAD yen. The Swiss yen roughly half. Euro yen roughly half. So roughly half of the yen pairs variations passed. But what we need to do is look at on this, and this is my next part of the analysis, is to look at what is failing. Yeah, so we've got at least half of the tests run on these permutation tests are profitable, which is great. So we've got a basis to start from. So I'm looking for something in common with all of the winning ones in these settings. So we'll probably find that if you're using, let's flick through actually and do the analysis quickly now. So on Euro Yen, just looking at the page that I can see in front of me here, the maximum wick of anything from 10% to 50% seems to be profitable. So we've got a 10 in there, a couple of 10s, we've got a 20, a couple of 20s, a couple of 30s, a couple of 40s, a couple of 50s. So basically it seems that wick size doesn't matter. ATR stop. So this is the pullback. You can see that all the profitable ones are 0.2s and 0.3s. So what we're saying is if we get this big bull candle, we want a small pullback. Yep. So targeting the bigger pullbacks, 50% and down, is not getting triggered. So we're saying get in fast on a pullback. So the pullback distance needs to be small to make money. Pending expiry 23.46, 23.46. There's a 69 there. So this is and a 92. So that's 4 days. So I'm testing 1, 2, 3, or 4 days to hold that pending order open for. So it doesn't seem to matter. So what I would suspect is because we're targeting such a small pullback, doesn't matter what that input is, it's going to trigger or it's not. Yeah. So it's either going to pull back and trigger or it's going to just not trigger. So it doesn't matter if you leave it in place for 1 day or 4 days, it's just not going to get triggered. What it does mean is if you leave it for 4 days, it's not going to have the opportunity to take trades on day 2, 3, or 4 of that trend. Yeah. So I might run some more tests just using a 24-hour expiry on that because the results should be pretty similar. And targeting TPs, half of the range of the candle to 1. So this, where it says ATR TP here, just to clarify, this input for take profit is based on this input. So it's the size of the candle, yeah, not ADR is what we're measuring here. I'm using the same inputs basically, but it's basically whatever that candle was that we measured the pullback on, it's a multiple of this candle's range. So when I say we're targeting half an ADR or 1 ADR, it's half of the range of that candle or 1 range of that candle. So it's a variable. So 1 or half are the ones that stick out to me to be the ones. So if you target 1.5, we had one there that was profitable at 1.5. We had one there that's profitable at 1.5, but the vast majority of these are 0.5s and 1s. So it seems to be that the best thing to do is target whatever the range of that candle was. So we're pulling back 20% and we're going to target that again. Think Fibonacci extension ratios. Yeah. When you place a fib on something, you're looking for a pullback to 38, 50, 61.8. The targeting on it is normally 161%. So when you pull back, what people tend to do is target 161% of the ratio. Yeah. So if we're targeting within the range that the pullback has happened, that is easily achievable. Even if this isn't going to continue to trend, we should be able to get that target hit. So bear in mind, obviously, there's a trailing stop running anyway, which is going to reduce risk as the price moves for us. But equally, if we get to just shy of 100% of the range and then it pulls back, the trailing stop will have kicked in and give us half of an ATR in profit anyway. So it seems to be that using small targets is best. So what I read from that is pending probably doesn't matter. Would need to run some more tests on it. Wick size doesn't seem to matter, which is interesting because I thought that would be the thing that did matter. And having a very tight pullback is important. So targeting 1R basically, and a pullback of 0.2. So we'll look at the others and see if we've got any continuity between each of them here. So Swiss yen 0.2, clear winner. Targeting 0.5 to 1, pretty much the same. Expiry, there's more 23s in there than there is anything else, but there are 46s, 69s, 92s. So 1, 2, 3, 4 days doesn't really matter. Wick size, there's quite a variant there as well. Bear in mind with wick size, the higher the number will also incorporate all the low ones. So if you set it to 10, by setting it to 20, you're also saying it can also be within 10. Setting it to 30, it can also be within 20 or 10. Setting it to 40 means it can be any of them. Yeah. So when you're getting all the 40s and 50s showing up here, it means that we're looking for the price to be at least above half of the day's range. And then we're going to target a little bit of more of a pullback. So what we're saying is we want to have pushed. The pullback is already underway today, but we want the pullback tomorrow to continue a little bit more, but not invalidate that low. Yeah. So it doesn't seem to matter, this wick size again. So again, same settings, 0.2 for the pullback. So we want to get in quick and target a fairly small amount. CAD yen, again, doesn't seem to matter. 0.2s, very much prevalent there, and 0.3s. So again, small pullbacks. ADRs, 1, 2. We've got a lot of 2s in here this time round. 1.5s, but there's also the 1.5s. So it doesn't really matter about target on that. So that kind of tells me with the Swiss yen, both safe havens, that when it takes off fast, because what's probably happening is you're easily hitting your TP without your trailer getting triggered, because the Swiss and the yen are the most volatile during safe haven runs and when they're trending. So therefore those two together are going to move a lot faster. So, but we have to set something. So I would probably go with the 0.2 and the 1. Again, that would be the obvious choice. It just so happens to give a fairly decent profit as well. Return on drawdown is 2.7 on it, which is good. Aussie dollar yen, again, doesn't really matter. 0.2 most of the time. There's a couple of 0.3s in there. 1, 1.5 noughts. Doesn't really matter about the TP. Again, in a trending system, your trading stop is there just to basically reduce the risk. It's not there to get you out in profit. It's just to reduce the risk. So if you're right and you get the pullback and it starts to move, you want to get your risk reduced quickly, which means that all the losers are much smaller than the winners, because in trends, obviously, you're going to let your winners run. So those look pretty good. We can use pretty much any target, but again, I would probably just choose 1 because it gives consistency across the strategy. New Zealand dollar yen, again, 0.2 pullback. So that's the thing that's coming, that's really shining at me at the moment, is virtually every single currency we want a small pullback. The bigger the pullback, yeah, so if you're waiting to get to 0.3 and 0.4 of the range in a pullback, you're starting to make less money, and you're also, let's look at number of trades, taking a lot less trades. Yeah, so we're starting to take a lot less trades as we're waiting for these bigger pullbacks to happen. And also, if we're reliant on it being a very strong closed candle, we're also taking a lot less trades. So this is kind of pointing to the fact that if we get an up day and it closes anywhere in the top half, there's a high probability that it's going to continue to do a pullback and a continuation, with at least testing the high, giving us a break-even stop because we're trailing. So that's basically what seems to be happening with the strategy, which is great. US dollar yen, 0.3 is the main pullback there, and 0.2. So somewhere between 20 to 30% pullback. ADRs, 1. There's a couple of 2s in there. Half seems to be a little bit more prominent. So there's a lot more halves in there and 1s than there is 1.5s. Wick size doesn't really matter. Pound yen, the same. So with all the yen pairs, it seems that we want to be targeting a 20% pullback, roughly 180R as a target, a hard target. and the wick size doesn't really matter, but I would say probably to be somewhere in the middle, we'll go with a 40 or a 30. It doesn't seem to really matter too much. There's less 50s though, meaning that it's better to close a little bit higher than 50%. So probably 40 or 30 is probably the ideal setting. So let me just quickly set those up. So we're looking for a 0.2 pullback. We'll go with 40. And the hours expiry doesn't really matter. And we'll go with 1. So that's kind of what looks like to me to be the best options at the moment with the yen pairs. Swiss pairs. CAD Swiss, same thing with a pullback there. We've got 111 out of 480 passed. So the further we go with pullbacks, the smaller the target, the less money we make. So again, we want to give the trade time to move, because the whole idea of trend trading is we're going for a bigger target. Euro Swiss, small pullbacks, 0.2s, 0.3s. That's half an ADR, very clearly looking for small targets there. 412 out of 480 tests passed there. With the Euro Swiss is a very, very, very strong trender when it trends. So that kind of makes sense that you're going to get in quite a lot and going to get quick profits, because Euro Swiss moves together. It's a very low ADR pair. When it trends together. Yeah. So it either does very tight range or very tight trend, meaning you've got to get in fast and get out fast on those. So that makes sense. Pound Swiss, 0.2s, half. Again, 244 out of 480 passed there. New Zealand Swiss, half. So roughly half of these are passing. But the ones that are making losses, very clear. With the ones that are making losses, it's the ATR pullback is the thing that makes them lose. So what we're saying is, if we got a candle, we get in somewhere around about here. If we wait for it to come all the way back to here, so a very big pullback of 50% of this distance or 70% of this distance, there's a high probability the trade won't work. Why? Because over 2 days, it's creating that. Yeah. Bearish. Yeah. So big pullbacks are not good. So think fib, something like a 61.8 to 71.9 retracement is not where we want to be getting in. We want to be getting in on a 23 to 38 retracement. Yeah. Quick kind of flag break pullbacks. That's what this is pointing to being more effective. Again, 114 passed on the US dollar Swiss. TPs are roughly the same. Tight pullback. It's very, very mixed, isn't it? So yeah, so there you go. So much better on the yens than the Swisses. However, works on both. The normal FX pairs, we've got a much lower strike rate. We've got 100 out of 480 passed there. Aussie New Zealand, actually half of them passed on. Aussie US, 47 out of 480. So only 10% of the tests on the Aussie US passed, and it's the ones with the tight pullbacks. Still work. Euro odd, only 71 passed. Again, very mixed results on that one. So likelihood is if you did this on the Euro odd over 4 years, you'll probably find it's a losing strategy. However, as a portfolio, you're going to have some losers in there. 104 of 480 passed there. Euro pound, only 73 passed. Euro US dollar, only 45 passed. So what this is telling me is, on the non-yen and non-Swiss crosses, which is all the normal pairs, Aussie Swiss, Aussie CAD, Aussie New Zealand, Aussie US, Euro odd, etc., not successful because it doesn't trend as much. Yeah. So I'm going to do a full test and finish this off, hopefully today. But what I want to do is check all the US dollar pairs, because obviously the US dollar has been, and I suspect is going to be strong moving forward. But Aussie US there, only 10% passed, which is terrible. Yeah. Euro US, only 10% passed. Terrible. So it doesn't look like it's going to work on the US dollar pairs, which is great because I'm going to be position trading those. So this is almost perfect, because the pairs I don't want to position trade, mainly Swiss and yens, this strategy kills it. Yeah. So we'll run a test with that. Pound Swiss weekly range just hit. Let me just quickly check my Swiss yen want to see if I'm back at target on that. Yeah, so I'm back to almost break even on that Swiss yen. Just get rid of some of these. See, look, back to break even, but I'm still half a percent in drawdown, $850 in drawdown swaps. So that's how much swap I've paid on this hold short. Again, which is why moving forward, I'm going to be using my swap filter. I'm not going to be getting into these because for me to get out, I've got to basically get all the way down there. I need to get about somewhere between a quarter to a half an ADR of distance beyond my average price just to get a break even because of the cost of swaps. This is why we've got the swap filter in the position trader here. So let me just rerun that test with those settings. So these seem to be the optimal settings. Let's run it on CAD yen and let that go and see how we get on. Let me just slow it down a little bit. So there you go. We can see, so we had an up day there. Yeah, we've placed our pending entry 20% back. You see in a strong trend, it doesn't even get back to the 20%. But if it does, that's where we're going to get in. So this one here, we pushed down. We had a 20% pullback. In this case, you had a 61.8 pullback on that leg, look. But then we went straight to target. Yeah. And the ones where we get in, like a long here, for example. So that was a big push up. We pulled back for our entry. We didn't quite get to our target, which was all the way up there. So our trailing stop saved us and took a tiny, tiny loss because the market went range bound for 3 days. So we got out with pretty much a break even. So that's the idea behind the trailing stop. So we'll let that run. Again, market not trending at the moment, so we got a lot of stagnation. Now it's started to trend a bit more. We get more profit. So again, this is going to be one of those strategies which is a little frustrating, a little bit like the opening range breakout or the stock index hedge strategy, in that you're going to get periods in time where it's just not going to work. But those periods where it's not working, it's not losing. You're not getting your equity curve going like this. You're getting your equity curve going like this. Your equity curve goes range bound when the market goes range bound. When the market is trending, your equity curve trends with the market. Yeah, because we're letting the market run and give us a big profit. So looks pretty good overall. This is using a fixed 0.1 lot size. Yeah, so I'm using just literally a 0.1 lot size on everything here just to keep everything stable. It is using a martingale factor of 0.1, which means that when we get a losing trade, we take an ever so slight increase in the next position size. Yeah, because the strike rate on this, when this test is run, I'll show you, is higher than normal for a trending strategy. So trend-based strategies typically have a strike rate somewhere between the 30 to 35% range. Yeah, this is a little bit of a hybrid in the fact that we're not basically getting in, and most trend strategies don't use a TP. They basically use some kind of trailing mechanism to exit them. The problem I found with all trading mechanisms is what you do is you find you get all the way up here and you've got a shed load of profit. So let's say, for example, we got in on that trade there and you've got a trailer. What tends to happen is the market moves all the way up to there and then you get taken out on your trailer and you miss roughly 30 to 50% of the profit, basically. But it's, so for me, a trend trading strategy is better to get in on the trend, get the money, get in on the trend, get the money, get in on the trend, get the money. Don't get in on the trend and hope that you don't get a day like that that takes away all your profit. Yeah, so this is why the equity curve is so nice on it. So as you can see, strike rate 41%. Typically you get between 30 to 35 on a trend-based strategy. This has got 41. So it's a much higher strike rate because it's a kind of a hybrid trend system in the fact that we are using a TP. So we are getting into the trend multiple times rather than getting in once and hoping that we catch it. Yeah. So if we're in one, we're going to get in it many, many times. So I'm going to work on this a little bit more, but I will pop the EA into the members group and you can do your own testing on it. I've done very limited testing on it so far because what I've done is I've replicated the strategy as I remember it from when I was taught it. I can't find the documentation on it. And the reason I scrapped this initially was, this was 10 years ago or so. The reason I scrapped it initially because I thought it was crap, because my opinion of trends back then was, well, what's the point in having a TP? That's stupid. Because basically in a trend, if you need to ride it, you need a moving average or you need a parabolic SAR to get out. That was my naivety at the time. But realizing now that actually, yeah, getting in and out multiple times is a much, much better way of doing it. Strategy is very good. And this is how I remember it. And I'm not sure I remember it 100% right, because I'm pretty sure there was a moving average filter in use. So I'll put the EA out there. You've also got a moving average trend filter obviously built in. So I'm just going to quickly apply that filter. So let's use daily 20. Does that sound about right? Yeah, so I'm just going to use the daily 20 and just see what that has as an impact. So I'm using the angle of the daily 20, not having to be above or below. I'm using whether it's pointing up or down. So if we're pointing down on the daily 20, we know the market's trending in that direction. If we're pointing up, we know it's trending up. But bear in mind, obviously, when the market is range bound, it's going to give that signal, that signal, that signal, that signal, that signal, that signal. And it doesn't matter if you use above or below or angle of, it's going to give you in a range, it's going to give you signals up and down all over the place, because it's not trending. It's not going to work. So I'm going to just run it again with that filter. Let me just quickly take a screenshot of that report. So this is the results without the trend filter. So, whoops. So I got that screenshotted so we can compare. So I'm going to run it now with a daily 20. And we'll see what that comes out at as well. See if the equity curve and the profit and the XYZ is better or worse. So basically with the trend filter, what I've done is I've got the EA to draw the moving average in, basically. So these arrows here say that the angle is pointing upwards, and this is the actual daily 20 moving average. So it actually draws these arrows at the moving average price and shows you the direction. So this will only take long trades, basically, because the angle is up, and this is where it is. So if you didn't use the angle, it would need to be above these arrows, basically. So that's all that. It's just a visual representation of the actual MA on the chart, because I wanted to just verify it in testing. Drawdown, very small, obviously, on this, because it's a stop-based strategy. We got small drawdown. We've taken $500 of drawdown. We've made 1,100. So return on drawdown ratio at the moment is 2. Can't go wrong really with that, can you? Obviously, the test's not finished. So 536 drawdown is the max DD we've had, which is your max losing run. We're up to 1,500, 16, 17, finished. So we finished 1,600. So that's a 3-to-1 return on drawdown ratio. Fantastic. So comparing the results, we've made $2.5 grand profit not using a trend filter. We've made 1,600 using a trend filter. Not using a trend filter, we took 500 trades, just under 488. Using a trend filter, we only took 278. The strike rate with not using a trend filter is 41%. The strike rate using a filter is 41% as well. The drawdown without using a trend filter is 368. With using a trend filter, 536. Who'd have thought it? Adding a moving average trend filter to a trend strategy makes it perform worse. This is what testing is all about. I know this already because I've done this many times. This is why I don't use moving averages in my trading. They're rubbish, because by the time the moving average has said you need to go long, it's gone long. It's ready to mean revert. You've missed it. So let's ride the trend down and make money on the uptrend using the downtrend. That's the way you should be trend trading. Trend filters don't work in trend trading. Prove me wrong. This proves me right. I've done this test so many times, that's why I know it. But it's totally counterintuitive, but it is true. Trend filters do not make trend trading strategies better. They don't make any strategy better for that fact, which is why I completely excluded it from the position trader EA, and everyone moaned at me. That's why I excluded it. They don't work. So yeah, so adding a moving average, not good. Don't do it. Don't use moving averages. So I'm going to be working more on this and doing some more system parameter permutation tests on it. I'll need to tidy the EA up a little bit because there's a lot of inputs in there that don't work because of the way that I've coded the EA in, because I just want to test this certain elements of the strategy. So, but I'll stick this in the members group for you to have a play with because it's got legs. And I really want a trend strategy to complement the position trading strategy, because when we go into drawdown on squeezes, we're going to be making money. That's what I want. I want to be able to make money during the squeezes. And now we've got Trump in, more than anything, we're going to get some squeezes, because he's the type of person that will just tweet something, the market will react, and then he'll tweet something again, the market will react. And there's a high probability the market will go nuts because of something, and you're going to get these moves started. And we had it before. I remember the Christmas when Trump was in, one of the Christmases Trump was in, the US dollar Swiss squeeze was caused by him moaning about something. I can't remember what it was, but he started this rally off. Yeah, Santa rally. We normally get everything rallying. Completely did the opposite. So we're going to get squeezy months. So what I'm going to be doing is reducing risk on the position trading strategy, but complementing it with things like this. So spreading my risk basically across different strategies to make sure that I'm not reliant purely on position trading. Because so far this year, I've made, as I said before, 30% of what I normally make this year, which is not good. It's good because I'm profitable, but it's not good because I'm not as profitable as I was. And it's because of the squeezes. So if we can milk the squeezes, it's going to replace those losses. So there you go. So that's the strategy. Any questions on it? Morning, Lucas. I think I said that. CK, for size of the bull bear candle, could you limit entries dependent on the size of the candle? You could do, but in low volatility markets, you're going to get smaller candles, but you're still going to get trends. I don't think it would make a lot of difference, the actual size of the candle. Basically, we've got a stop. So what we're looking for is, if you get a bull day, I don't care if you get a bear day the next day. I want you to continue to have a bull day at some point in the next couple of days, is all we're saying. Which is, if we're closing more than 50%, that's usually enough of a filter to say there's a lot of buyers in the market at the moment. That's all we want. If you say, I only want, and this is the thing with strategies, yeah, all strategies, the more inputs you have in a strategy, the more variables you have in a strategy, the more you're going to curve fit that strategy by picking just the best bits. So if you had a candle size filter, i.e. we've got to close within 20%, but the candle has got to be above 20% of the average daily range or whatever, you're adding another variable in there, which means that there's another complication for the strategy to look at, which means that the chances of it reproducing itself in the future is less. The less inputs you have, the best possible strategy you can have is a single candlestick. So every time we get a, let's say, a shooting star, and the shooting star's head is no more than 20% of the entire candle range, short it with a stop above the high. That's the simplest strategy you can get. If that comes out as profitable, there's a very, very high probability of it working. If you suddenly add another variable of the candle size in there, you've got two variables working together that have to be met. Therefore, the odds of it working reduce because there's two things that have to be met. If you then add a moving average filter, it also has another thing that has to be met. The more you add in, the more complexity you add in, the more variations of the strategy there are, the more likelihood there is of the one that you pick not being in that bell curve of outliers, and it just doesn't work as well. So the simpler the strategy, the better. The less moving parts it has, the more chance it has of repeating itself in the future. So this works as it is. If I add another thing into it, yes, we could find something that makes it maybe 5 or 10% more profitable, but the chances of it repeating itself in the future is going to drop. But that is something that could be employed. There's 1,000 things that could be employed into the strategy. What I'm looking for is something simple that just works. And it works across multiple instruments, and that's the important thing. So if I switch this from CAD yen to Aussie yen and run the same test without the moving average filter, because we know that that isn't as profitable, we should get positive equity curve. Which EA set is this? Sorry, I'm new in the members YouTube. This is the first time I've covered this today. It's a brand new. Lucas, this is a new strategy that I've been working on, a trend strategy. So it's not. This is called the Swiss Army Knife EA. So I have an EA called the Swiss Army Knife, and the Swiss Army Knife basically EA is an EA that has tons and tons and tons of inputs, so that I can basically plug any strategy into this EA, and all I need to do is enter the entry criteria, and then I can back test and optimize or build a strategy around that entry criteria using all the main ways of getting in and out of trading. Yeah, so if you go and look in the members area, there's a few videos that are worth watching. Yeah, back here, all these back testing ones, yeah, are worth watching, especially this one, exit methods, and not so much candlestick, but exit methods is an important one, and robustness testing is what we're doing now. That's probably the best, the two that are probably, yeah, I would guess the ones that you really need to watch. TP1 and 2 hit on the DAX. That's bagged $1,000. I got 300, so £700 profit this morning on the ORBs, which is nice. So yeah, we'll see if that gets hit, but I don't really care. Just lock that 300 in and be done with it. 700 on the morning, which is nice. Right. So that's that done. So yeah, any other questions on that? Morning, Harold. I think I've already said that. Sarah, I cannot connect my YouTube account to Discord. I have a family subscription. I don't know. I don't know. Is there another way to connect or get access to the members area? No, that's how it works. Someone else had that problem and they figured out a way around it. I'd have to ask in the members group. I'm just trying to think. I can probably add you in manually, to be honest. Can't I? Or can I? I don't know if I can. Message me in Discord and I'll see if I can figure it out for you. I had the same trouble. Oh, yeah, there we go, Lucas. I had to connect my YouTube account to Discord. I had the same trouble. I had to connect my YouTube account to Discord. Oh, yeah, but I think it should work with a family subscription anyway. Yeah, I don't know about that bit. Have we found the Holy Grail yet? No, doesn't exist. We have found a good strategy, though. New one, yeah, okay. Right, okay. So that's the trend strategy. So I'm going to be working on that a little bit more. But as I've found here, this works very well on the yen pairs. This test that I'm running here is 4 years. Okay, so this is a 4-year test post-COVID. So I haven't done any out of sample testing yet. So That's the next stage, out of sample testing. So we need to test. Let's do some now. Why not? 2016 to 2020. 01. Go to January. I'm going to ignore COVID for the minute because COVID's COVID. But let's try 2016 and see what the results are like. So this is an out of sample test. So we're now testing on a period of time that we've never seen before with this strategy and see if it holds up. I'm not looking for it to necessarily be profitable. I'm looking for it to break even. So yeah, it broke even. That's fine. Yeah. Okay. So it's a break even on that particular pair pre-market. Let's try the CAD. Good, profitable. What did I just test? I can't remember what pair I just tested. Let's try another one. Try the Aussie yen. Did I test this one? Can't remember what I tested, what I didn't. I think that must have been the one I tested. Yeah, that's the one I tested. Try euro yen. So these are just very rough out of sample tests, because the set file that I've picked may not be the one that's best to use out of sample as well. So if we can find something that's better out of sample, we can match that with the in sample version of it. And if that's profitable as well, we've got a better set file that works over an 8-year period. Lovely. Pound yen. So basically this is out of sample testing. So again, if you haven't watched those videos, go and watch those videos on how to do robustness testing. All of this stuff at the beginning of the sessions, beginning of when I started the members group, is all about robustness testing. This is what we're doing now. We're basically taking a strategy, we're testing it, optimizing it, and then we're taking that strategy and we're placing it over a time period it's never seen before to see if it still works. So if you test something over 4 years and you pick the best possible setting over 4 years, what you've done is you've curve fit that setting to that data set. Now, if you take that setting and place it over a completely different version of data that it's never been tested on before and it still produces good results, break even or better, you know that you've got something that's robust because it's never seen that data. It didn't know how to trade it and it still made money. Yeah, so this is good. We've got a problem with something in there. I've noticed this on all of them. October 2017. What happened in October 2017? Oh, that happened. Whoa. Oh, that's December 2018. Sorry. Where's it gone? October 2017. Oh my God. Where is it? September, October. Here. It's that period there. Don't know what happened there, but it didn't like that. It just got it wrong in that period, didn't it? So you got a blip, and then you got a nice run up. You got a nice run up. You just got a blip in there somewhere. Nothing much you can do about that. But you know, this is what robustness testing is all about. Testing it over time periods, so we know that this is going to work into the future, because for the last 4 years it's worked really well. For the 4 years prior to that, it worked okay. It didn't lose money. So in the next 4 years, there's a high probability it's going to work. The reason I focus my testing on the 2020 to date for initial testing is before COVID, the market was a very different thing. Post-COVID, the market has been what it's been over the last 4 years. You can only assume that we're going to be more like this than we are like this. The market is different now. So by testing on a more recent time period, you've got more chance of this happening than you have of going back to what it was like before COVID. Yeah. So, but obviously before COVID, if I was running this strategy, I want to make sure at least it doesn't lose money. It doesn't necessarily have to make money, but it does, as long as it doesn't lose, it's robust. Yeah, that's my my thinking behind it. Great session. Good. Could we look at the stop loss lazy trader strategy version 2? Not today, I don't think, because I've still got to go through all my results. My results are brilliant. So well, let's do that first. So the lazy trader strategy version 2 that I gave the on. I've been doing a load of back testing, load of robustness testing, which we'll go through now. We will go through it, Vitaly, if I've got time. I just want to these are going to run over more than an hour because we're only doing a couple of weeks, so people can catch up in parts on it. But I just want to run through these results of the lazy trader strategy as well, because I've been doing the testing on it. Yeah, I've tested robustness tested the number of trades to have before we start closing. So for those that don't know this strategy, it's very similar to what I've just shown you, in the fact that what it does is we get a candle that's bullish, and basically it does the opposite, if you like. We are targeting basically the push down. So let me just quickly explain the strategy. On a daily candle, yeah, we got a down day. What we're looking for is, when we get a down day like this, we are going to take a long trade immediately and target a retracement. Yeah, so that's what we're doing. So we're targeting an ADR, a percentage of ADR, because fibs, this was originally a fib strategy, but the fib doesn't work in the back tester properly. So we just changed it to target ADR. If it doesn't work out and we don't get our target hit and price pushes down, we take another trade. So we turn it into a position trade. So we can set a distance between trades. We take a second trade, and then when price pushes back up, we just get out at break even. Yeah. So the idea and the edge of this strategy is that around about 70+% of the time, the strike rate is about 70% or so or higher. We get a pullback after a big down day. Yeah. So it's a scalping strategy. We're scalping intraday to get out. If it doesn't work, we turn it into a position trade, and we just look to get out of break even. We don't want to make money on it. We're looking to make money on the 70%. On the 30% that don't work or so, we just want to get out without losing. That's the edge of the strategy. Yeah. So the inputs are that we get in at 9 p.m. If we don't make money on that initial trade, we just look to get out with $10 profit, which basically covers our commission swap. And depending on spread, it will either or won't cover it. We close the oldest trade after we've taken 3. So if we get into a trade and we don't work out, and we get a second one and it doesn't work out, we get a third one and it doesn't work out, if we need to take a fourth one, we start shutting, which keeps our average to get out at a break even close. So we've got to do drawdown control. It's a position trading strategy. It has to have some form of drawdown control. If it doesn't, the market could trend forever and you will never get out, and it will just blow your account. And I've proven that because it does. If you don't use this setting, sometimes it will sometimes work, sometimes it won't. When it doesn't, you've blown your account. Also, without using this setting, you're going to get very high drawdown. If you're trading 10 pairs at the same time and they all decide to go into a squeeze, you're going to blow the account. Yeah, so you've got to have some kind of drawdown control. Entry price must be within a certain percentage of high low of the candle. So that's exactly the same thing when we get a bull day. Yeah, if that's the bull candle, that wick and the 9 p.m. cannot be more than, in this case, 30%. Multiple ADR for our take profit is a quarter of an ADR. So when it pushes down, we're looking for a quarter of an ADR retracement. That's where our TP is going to sit. And adding extra size to the trades, a percentage of ADR. So when we take the first trade, if it doesn't work out, it needs to have moved down at least 1 ADR before we take another position. And these conditions also need to be met. So we need to have a strong down day candle within 30% at 9 o'clock for us to be able to take a second entry. Yeah. So those are the settings. So that's what I've been doing the robustness testing on. And I've run robustness testing on, let me just shut that one down. I've run robustness testing on 4 variables. So this is running 1,080 tests per pair. So we are testing basically 1,000 different variations of the strategy. Okay. And this is the exciting part about this one. So I'm testing the close max number of trades. So this is how many entries we can take before we start shutting the oldest ones out and doing DD control. So I've tested it from I've tested it from 1 to 6. I've tested the entry price, the distance from 10 to 50. So basically the same test as I did on the other one I've just gone through. The TP I've set from 0.2 in 0.1 increments up to 0.5. So I'm looking either for a 20% of ADR to a 50% of ADR retracement. Yeah. And the distance between trades as 20% to 1 ADR. So when we get into our first trade, it either has to move 20% of ADR or 1 ADR away before we take our second entry. Yeah. So those are the variables that I've tested. Out of 1,080 tests on this one, Aussie dollar CAD, we got 1,073 pass. So it's 1,073 out of 1,080 passes. Huge. So basically it means it doesn't matter how many trades you decide to take before you start doing drawdown control. It doesn't matter how big you want the wick to be. It doesn't matter what you set your TP at, and it doesn't matter how far apart you space these trades. 1,073 variations of them pass. That's pretty much 100%. Doesn't matter what you do. If you just get in when the candle is bearish and target a pullback, you will make money. That's basically what this test is saying, and it doesn't matter what you target. Aussie dollar Swiss, 956 out of 1,080 passed. Again, pretty much 90% of the time, this will make money. When it doesn't make money, it loses a maximum of $1,500. This is a 100K account. It loses nothing. Yeah, so if it doesn't work, it breaks even, is basically what I'm saying. Aussie New Zealand, 700. So over 70% of the tests passed. On a normal standard bell curve, you're looking for at least a 60% pass rate with 30% outliers either side. That always looks phallic when I draw it, but that is a bell curve. And these are the outliers. I should draw the outliers differently, shouldn't I? So when on a standard bell curve, you have a period of outliers either side, and you want most of your results to end up within that 60%. We've got 70% there. So again, this is a pass for me. Aussie dollar, US dollar, 1,005 out of 1,080 tests, positive. Return on drawdown ratios are up to 3. So somewhere between 1 to 3 return drawdown ratios. Fantastic. CAD Swiss, 76% passed on the CAD Swiss, a Swiss pair. Anyway, Euro odd, 1,076 out of 1,080. 4 didn't. Euro CAD. Now, this is the anomaly. 355 passes. So for some reason on the Euro CAD, this strategy did not work very well. Only around about 30% pass rate. So when you look at it, you get down to this area here. We start to make losses from this area below. Not sure why, but it does. And when you get down to the worst losses, it's about 5K. So I think this was a test. Was this 50 grand? Oh, no, this is a 50 grand account, sorry. So that made a 10% loss on Euro CAD. So it's an anomaly. For some reason, it just doesn't work on the Euro CAD. Euro pound, 1,037. Euro US dollar, 980, 830. Yeah, you get the idea. Yen pair, 186 passes. Yeah, this is why I'm looking for a trend strategy. Mean reversion does not work well on yen pairs because it's a trender. Yeah. Now, the caveat with this is it's a trender for the last 4 years, and it was a trender before COVID. Before COVID and the last 4 years, the yen has been a carry trade with negative interest rates. This year, the Japanese decided to break that 20-year cycle and move into a positive interest rate structure for their monetary policy. Is the yen going to be a trender for the next 4 years? We don't know. So I might be doing all of this to try and find a really good trending strategy for a pair that is now going to mean revert. I have no idea. But I'm just going to assume that people are going to still try and carry trade because their interest rates are only 0.25%. I assume the negative interest rate differential is going to make them long it more than short it, which means it will trend. But we don't know. So it doesn't work, this strategy, very well with the pound yen. Mean reversion, position trading doesn't work very well with the yens either. So it's no shock. Pound New Zealand, 975. New Zealand, pound US, 998. 1007. 1003, 953, and another Swiss pair, 618. So the interesting thing with this strategy, I've only tested 2 Swiss pairs, but on the 2 that I've tested, it's got between a 60 to 70% strike rate of variations working. Phenomenal. So falls within that bell curve of me being happy to take a go at the Swiss pairs. However, they can also be filtered out. Now, I haven't completed testing on this. As you can see, the green ones down here are the pairs that I've tested. I haven't tested the rest of the yens or the Swisses. The yens, I'm 99% sure are going to come out as a negative. So I will test them all. But the one that I've tested so far kind of confirmed what I thought. It ain't going to work. So this is another position trading strategy that you can employ on the mean reverting pairs. So that's my findings on it. The next bit is the difficult bit, which is picking a set file out of 1,000 that work. Yeah, so I've got 1,076 out of 1,080 set files that work. Pick one. This is where it's going to become tricky. So that's my next stage with this strategy, is to kind of look through the results and see what correlation we have between them, that we can say, right, well, it's obvious with all of them, the close at max is 6s and 5s. The close at max is 6s and 5s. Aussie New Zealand, 6s and 5s, couple of 4s. Aussie US, 6s and 5s. Euro odd, 6s and 5s. So it's obvious to me that we want to let the thing run and give it a chance to breathe and give it a chance to get us out of those trades with a break even. So we don't want to be getting out after 2 or 3 trades. We want to be getting out after 5 or 6. So that is a constant across all tests. So therefore I would sort of say we'll choose 5 or 6. It's a set file. So the way I normally do this is I filter these down and say, right, just show me all the 5s and the 6s, because I'm going to pick one of them. And now, what is the continuity with the wicks? So 50, 40, 30, 30s, 40s, 50s, 50s, few 20s, 40s. It doesn't seem to matter, does it? It's the same as the strategy I've just covered. This is interesting because this is the one thing, the strength of close of that day is the one thing that I would assume from a price action perspective that was important. We've strong closed, therefore the pullback should continue. That's the whole premise, or we should at least pull back from the strong close, because in this case we're exhausted. Yeah, doesn't seem to make any difference. So pick 50, 40, 50 or 40 is probably the best thing to pick with those. ADR TP distance, and we looked at this, and Evil, you know, we came up with this conclusion as well. When I was testing the original version of this with the Fibonacci tool to do Fibonacci retracements, the initial strategy was 38.6. That was the target. We looked at it, we tested it with 23 and with 50, and it came out with virtually the same result, meaning that if we've got a big, strong day, it will pull back. Most of the time, it will go to the 50 level, which means that it doesn't, the 23 is not worth using, the 38 is not worth using. You might as well go for the 50 because you're going to make more money out of it, and they hit virtually at the same rate. So this is kind of confirming that finding, that it doesn't matter if you use any of these, but the 0.5s and the 0.4s are the better ones because they're bigger profits. Therefore, you're going to make more money, give you a much bigger return on drawdown. It will probably affect your drawdown because there'll be more instances where you won't hit that. and your drawdown will probably be higher than if you pick a smaller TP. So if we go down to the smaller TPs, there's some 0.2s there. You're making less profit, less return on drawdown. In fact, the drawdown is so small. I mean, this drawdown's like tiny. Doesn't seem to make any difference, actually. Doesn't make any difference. Again, it's one of those strategies. This is like, you know, this is the thing. This is position trading. This is why I do this, yeah? Because it doesn't really matter what you do. The market goes up and down all the time. You need a reason to get in, and you need a methodology to get into and apply that risk to the method of price moving up and down. This is basically the same as the ADR reversal strategy. It's just we're doing it every single day rather than waiting for an ADR hit. So this is kind of an evolution of the ADR reversal strategy in the fact that we're just going to do it every day. So screw it. Is it bullish? Yeah, short it. Is it bearish? Long it. That's what we're saying. Rather than have we moved beyond the normal range? Yes, short it. It's the same thing, isn't it? It's just a daily trigger rather than a trigger based on price movement of a distance. So it doesn't matter what you target, really, but bigger is better, more profit. So if it's going to pull back most of the time, you're probably better off targeting a 4 or a 5. There's 4s in there. There's more 2s and 3s there on the pound odd. Pound CAD, a real mix. Somewhere between 3 to 5 looks to be optimal. ADR distance between trades. So 0.6, 0.3, 0.4, 0.6. Again, it doesn't matter. Just doesn't matter. However, there's not as many 0.7s, 8s, or 9s, or 1s in there. So what it's saying is, if the first trade doesn't work out, you don't want to let it go a full ADR because it's going to make it harder to get out because you've got to pull back half an ADR to get out. So you're better off having your trades fairly close together, because don't forget what we're trying to do is after the initial trade is taken, if we don't get the pullback TP, what we're trying to do is just get out. Yeah. So if you space these too far apart, it's going to be harder to achieve that exit at break even so that you can take another trade to make profit. So it's going to mean you're going to be in drawdown for longer, and you're going to start closing out those trades and doing drawdown control if you leave it too long. So these results are kind of saying you want to be using 0.2s, 0.3s. There's 1.9 in there, another one there. 0.4s, 0.6. So the vast majority of these are 0.2s and 3s, meaning if we get in and the next day it's pushed down more than 20 to 30% of the average daily range, take another one. Yeah, and hope that you get the pullback. Yeah, because if we've pushed down and we've pushed down again, it's pushed down for 2 days without a pullback because we didn't hit target. Therefore, there's more probability of a pullback, isn't there? Because we're more extended, we're more stretched, there's more chance of a profit take. If it does it 3 days in a row, there's even more chance of some kind of pullback. So we've got to keep on top of the position and get in quickly. This is also using a fixed lot with a martingale of 1.1, which is what Phil's original strategy was. Yeah, so we're just using 0.1, so we're keeping the lot size exactly the same and uniform across the entire test, and we're using a 1.1 multiplier. So we're getting in with 0.1. If it pushes down, we're getting in with a 0.12, and then we're getting in with a 0.1. Sorry, we're getting in with 0.11, and then we're multiplying that by 1.1, which will give us a 1.2. And then a 1.3, then a 1.4. So we're very, very slowly going up in lot size. We're not getting crazy on this, yeah? So there you go. So the tests that I've done look pretty conclusive that the strategy works very well. So closing out at 6 trades, max wicks of 50, targeting a 0.4 and an ADR distance of a distance between trades of 2, 3, 4, 5, something like that. They all work. So you can do all these tests yourself, but that's the variables that I've run the test on. Yeah, so let's just run that with 6 and 30 will do. Let's go 40. Take profit. What did I say? Somewhere between 3 to 5 and somewhere between 4 to 5 there. So let's go with a 0.3. Oops. Why aren't you typing? 0.3. Distance between 0.5, that'll do. Let's go with a 0.4. Okay, let's just run that on, I don't know, pound US. Not in optimization mode. Visual. Okay, so there's the trades. So market's pushed down. We've gone long with our TP there. We didn't hit target. Next day it's pushed down. We went long. We got out, break even. Didn't make any money. Got in because it's pushed down, targeting a small pullback. Didn't happen. We had a catastrophic move down, look. Took a second trade. Didn't work. Got out. So we've got a whole week and a bit there, not making any money. Then we had a push up. Shorted it, hit target next day. Pushed up, hit target next day. So we got 2 winners there, 2 break evens, and rinse and repeat. So that's basically all it's doing. Getting into multiple trades at times, running up to 4 or 5 trades, and if we get to 6, we start to do drawdown control automatically. And those are the drawdown controls. Yeah. So it is going to take losses, and the losses are going to be big in the squeezes sometimes. But you can't avoid it. You've got to get out. Yeah, this is position trading, as I've said many times. There's a perfect one. Look. Squeeze. Yeah. Position trading is not get in, cross your fingers, cross your eyes, and hope. That's not what it's about. You've got to control the drawdown. You've got to get out of these trades. If they are squeezing so hard that it's not looking like it's turning back anytime soon, you've got to control the drawdown, because you've got to get that average back within a range that is going to make you profitable, basically, or get out, or give you an exit to get out at a break even at least. Yeah. So it's going to have these periods, but it's going to also have these periods where it's just, I mean, this is only a 2-year test, this one I've just run here, but we've had 2 squeezes in 2 years, which is about right. A squeeze a year is pretty normal, but overall highly profitable. Let's run it over a bigger test. Actually, let's try a 2020. Let's go 5. Just pick a number. Oh, that's a biggie. Took a big hit there. When's that? August 2022. Something happened in August 2022 which caused a big drop. So again, you might want to look at that and use a setting that is similar to iron that out. So it might be a case of, if I run this with getting out after 3 trades, that doesn't happen. Then we iron that out, basically. So again, needs a little bit more work, but that's what robustness testing is all about. Retesting these over out of sample periods, which this is. Still profitable out of sample. It's not losing money, but obviously you need to identify these problems. So that's August 2022. What happened in August 2022 on the pound US dollar? Where are we? Of course, Liz Truss happened. You can't do anything about Liz Truss. She crashed the market, the budget. Yeah, the famous budget where we dropped 10 ADR in 48 hours. You can't do anything about Liz Truss. She fucked up the market. That's it. So that's the hit you took. But what did you do? Survived it. Yeah. So we survived it and we recouped. But You can't do anything about this sort of movement. It's there. You also can't exclude it from your results because it happened. We've just had another budget in the UK. Yeah, that also happened. It was nowhere near as catastrophic as the trust budget, but it happened, and it's nothing you can't ignore it. Yeah, we're going to have budgets in the future. So, you know, as long as they don't make it catastrophic, and that will only affect the pound US dollar, it won't affect the euro US dollar. So if you do the same test on the euro US dollar, you won't have that catastrophic loss. But reducing the number of trades will iron that out. So there's things you can do. But equally, obviously, you need to make sure it just works, basically, and it doesn't lose money. It's all about not losing money and making sure that the winning instruments that fit the strategy are the ones that generate the profit and outweigh the losers. That's what position trading is all about. It's a portfolio approach. So there you go. So that's that one covered. Vitali's set file. Let me quickly look at that. Is this the right MT4? We'll find out. What's it called? Lazy. Lazy V2 Froggy. So you're getting out of exact break even. You're not closing trades out, so you've got no drawdown control on this. Entry price must be within this percent of high low 30, multiple ATR 0.125. Not adding any extra positions. So how's this getting out when it's wrong? What did you say about this? Take one trade with a lot size of 4 and an ATR profit of 0.125. We exit after 2 hours. All right, so it's a timed exit. Okay. Exit after 2 hours. Okay. There we go. It's the trades are so small you can hardly see them. So this is a real scalping strategy, isn't it? So we had a bull day. So we shorted it. 2 hours later, we hadn't made any money. The problem you're going to have with this strategy is you are getting out in high spread Asian session. Yeah. You are not going to get a 2-pip spread. So this will be profitable, but you try and execute this live, I think you'll struggle because you're trying to execute trades in high spread periods. It might be all right there. I mean, you're also going to gap as well on New Zealand and Aussie pairs, and your spread is going to be like that. So I can run it on Aussie CAD over 4 years, but you are curve fitting, Vitali, there. As long as you understand, you are curve fitting it to a single instrument, which has also the higher spreads in the market at that point in time. Yeah, I've seen loads of these types of strategies out there. There's lots of EAs out there that trade during the Asian session only. Yeah, so you can run this test, but you certainly can't run it with a spread of 2. So you'd need to, let's look at the Aussie CAD for a minute. So at the moment, it's got a 1-pip spread, but here it would have had probably 3 to 4. So if I was going to run that test, I would probably want to run it with a 4-pip spread. Let's try it. I'll do it on non-visual. Or you could try, you can't run it on, yeah. Let's see how it goes. So that's made 80, it's made 34k over 4 years, 1.69 strike rate, 60%. So you've reduced the strike rate massively. We had a strike rate of over 70%. You've now got 59% strike rate. You've reduced the effectiveness. But that's because you're using a stop loss. But that's good. You know, it's over a 50% strike rate. That's an edge. Yeah. So you've got an edge. If we try it with 2 pips, spread is going to be the thing that is going to make or break this. So, so with a 2 pip spread, it's slightly better. So that's not a bad test actually. So even with a 2 pip spread or a 4 pip spread, you're still making money. Let's go worst case scenario and say we're going to get a 5 pip spread. You shouldn't really get a 5 pip spread at that exit time. If you tried this with a slightly longer exit, that might be a good permutation test to do. Try it with a slightly longer exit because you're going to get a tighter spread exit, but it's good. Works with a 5 pip spread as well. So what we've just done there is run a system parameter permutation test with spread. So we've tried 3 spreads and all 3 are profitable. So highly likely it will work. But have you tried this on other pairs? Let's try it on the monster spreader, Aussie New Zealand. Let's assume we do get a decent spread. Aussie New Zealand is the worst spread on the planet. Actually, Pound New Zealand is, but Aussie New Zealand is bad. So that's 48k. So that's double the account in 4 years. So it's about 25% return a year, which is huge. Drawdown is 1,770. Consecutive losses 3. I just want to run this, and I just want to run this on tick level. Just want to actually visually see this thing doing what it does. Yeah, see that TP you wouldn't have achieved because it's at the spread, at the swap. So the swap would have been that. So you wouldn't actually have achieved that. It didn't hit TP because the spread, it gapped down and then it pushed up to there. So that would have actually been the exit point. You wouldn't have achieved that because the spread would have been too wide to actually execute that order. So the better way of testing this is to remove the TP from the test, because that will stop these being executed, because you're not going to get that exit at the swap candle. I mean, you've seen what happens at the swap. Yeah, when you get to the swap, the candle's like that. Yeah, I've seen spread swaps on Aussie pairs and New Zealand pairs of an ADR. It's spread an ADR. Yeah, so you can't get it. So what the better test for this would be to do is to set that TP to something huge. So set it to something like 5, so that it basically will never hit the TP. So what we're saying is, get me out after 2 hours. And see if that works, because that's going to show you whether or not you would actually make profit just getting out based on time. See, that exit is achievable. And it's also a better exit because you got TP'd there, I got TP'd there. But that's just one trade, obviously. But that you can probably get that, I think you'd struggle. So any trades that closed out at midnight if you run a test and export the results, any trades that close at midnight, you'd have to kind of exclude those. But let's just see if this test does the same thing. See if we get a similar result. Because this will be a safer, probably more repeatable in the future test. Yeah, it's going to be more jagged, but it still works. So, I mean, there's nothing wrong with using the TP exit, because if the market will give it to you, it will give it to you. But if it doesn't give it to you, you'd have to rely on this. So this is profitable, and the exit at TP is also profitable. So if you use the version where you have a TP exit, you won't get the same equity curve that you would in the back tester, but you would still get a positive equity curve, which is fine. So this needs to be run on all pairs to test the validity of it. Have you also tested this with a different timed exit? There's a lot of variables to test on this. You want to run a system parameter permutation test on that and the time, number of hours to exit. So test variance of, you can't use 1 because that's swap. So minimum of 2, but maybe test from 2 in single hour increments up to maybe 8 or 5 or something, and see if they're all profitable, and then test TPs in increments of 0.125 up to whatever, and see if they're profitable as well, and run that system parameter permutation test over all the pairs and see how it goes. Let's just try it on something like pound US, because that doesn't move much over the Asian session. You also want to do a test on tick level of this as well, just to verify it on tick level. I mean, it even works on the pound US dollar. Doesn't work for Liz Truss. Oh, that's not Liz Truss. That's just something else. August 22. No, that is Liz Truss. This is a point. So, you know, this is the thing. Liz Truss is going to kill everything. This is the same as everything, right? Nothing's going to survive COVID. There isn't a strategy on the planet that survived COVID, unless you pressed the short button and went on holiday for a week, in which case, well done. Other than that, if you were trading normally through COVID, you did survive if you did something about it, or you took a massive drawdown. There isn't a strategy you're going to test that is going to work through Liz Truss on the pound US dollar. It's just a fact of life. You have to just take these hits. But overall, if you iron out Liz Truss, equity curve's pretty decent on an instrument that does not move during Asia. Yeah. So we're getting in at the end of the New York session, and we're getting out in Asia. So we're trading the pound and the US, which move in London and US, and we're trading them in Asia, and it's still profitable. So it's a good looking little strategy. You need to forward test this and run it live for a month and see what you get. The other thing you're going to have to bear in mind with this is your commissions and your swaps, because what you're doing is you are placing a trade just before they charge you a swap fee. So you are going to have swaps on all of this. Every single trade is going to have a swap applied to it. So you've got commission and swaps if you get charged commissions. If you don't get charged commissions, you've probably got a wider spread. So it needs to be live tested. This is the sort of strategy that I would put $1,000 into an account and test it on a live account. Don't test it on a demo account, because a demo account is going to give you preferential conditions. It's going to give you nice tight spreads. It's going to give you no big overnight spreads. It's going to give you the perfect execution conditions to make you money. So stick it on basically a live account and see if it works. You can't test it. It's tester only. Yes, it is. That's right. It is tester only. I can test it. I'll test it for you. I'll forward test it. But yeah, it looks good. I'm just always any strategy that operates here, I'm always wary of. There's tons of strategies out there that operate during this dark period in the Asian session, and they are all super tight scalping strategies. And the problem with them all is they don't take into account commissions, spreads, and swaps. And the trading conditions during the Asian session are incredibly different to normal. The volatility isn't there. The volume isn't there. So I'm always wary of anything that trades like this. However, if you look at it, we're not actually scalping super tight. That's a 2-hour move. It's a pretty big 2-hour move, isn't it? We're targeting over 10% of the average daily range of the pair. So we are actually targeting a fairly decent scalp distance. So I think it's got half a chance. This will be one that's worth me testing out. But it's one that, I mean, back testing, obviously it looks good. And the fact that it's using a timed exit means you can rely on the drawdown shown in here to be accurate. So, yeah, so we took 16 grand in drawdown. Don't trade it on the pound CAD. That just hemorrhaged cash completely on the pound CAD. Look, just doesn't work. Yeah, don't. Let me try the New Zealand CAD. This is probably to do with the Canadian dollar. Maybe. Let's have a look. Try a different CAD pair. Did you test the CAD pair? Obviously, Aussie CAD you tested on. So New Zealand CAD it will work on. Aussie, US dollar, Swiss, and Euro odd you've tried it on as well. US dollar, Swiss. Let's try that. It's not very good on the US dollar, Swiss at all. That's the US dollar, Swiss over 4 years. Made money. 9 grand's worth of drawdown. I think the issue you're going to have here is this. Look, if you get a gap, yeah, if you you need a filter in here as well to not trade on a Friday, because what you're going to find is this type of pair, Swiss pair, is going to gap at weekends. So if you're entering on a Friday and you get a gap down against you, the losses you can take, that move there, I suspect, is a very big gap, possibly. So you've got to be very careful on a Friday trading this, because you're going to get a weekend gap. So that needs to be tested as well. But looks good. Not sure about the actual profits the EA takes. Some profits are bigger than 0.125 ADR. That's because you've got the EA set to work on candle close. Yeah. So if you set that not to work on candle close and work on every tick, you'll get different results, because it'll be monitoring profit. Possibly, I don't know. It, you know, like with everything, any new strategy that is rolled out has got to be forward tested, because in the back testing, as much due diligence as you do in the back tester, you're always going to find an instance where it does something that you're not expecting. So I just need to check my Swiss. Still not out. Yeah, so you're going to need to just back test, basically. The forward test this. I'll forward test it and see if I can see if it does anything bad, basically, overnights and Fridays, that sort of thing. So, but yeah, looks good. It's a good little set file, but I'm always worried about these little scalpy things, because there's a lot of randomness and luck involved. You're relying on something doing the right thing within a 2-hour period. You're not giving the market much time to do stuff. If it decides it doesn't want to do this in the future, it's just not going to work. But you never know. So it's worth it. It's worth a test. Just dropping in for a few minutes while at work. Wanted to say, why not test this each pair during the hours they'd move? Because the whole strategy works on end of day, AZ. It's an end of day strategy. Vitali's just come up with a variation that is scalping here. The lazy trader strategy obviously doesn't work this way. He's come up with a totally different strategy. Just happens to use the lazy trader EA to execute it. But you could execute these trades at 8 a.m. So this is basically, if you go with 10 a.m. here, that's the London Open. That might work. No, blue's the account. Is there any chance to convert these to MT5? No. If I release the EAs, the strategies, then yes, they will be converted to MT5, but not for testing, because MT5's tester is terrible. I have to disagree with you, I'm afraid, Lucas. If you can't control the data, you can't control the test criteria. MT5 doesn't give you the opportunity to download your own data. You have to use its data, and its data is often your broker's data, and your broker's data is only 1 minute candles, not tick. Yeah. So it's not as good. I want to be able to verify my data, and basically the old saying in computer programming, which you may well know, but GIGO stands for garbage in, garbage out. The garbage in this industry is data. If you cannot control, verify, and check the data that you use to test with, that's what you're going to get. Yeah. So MT4 has a plugin basically which you can download data from any broker. So I can test my strategies on DarwinX's data. I can test it on Dukascopy's data. I can test it on FXCM's data. And I can test it on my own broker's data. If all 4 of those tests come out the same or within a variance of 5%, I've got something that works. In MT5, I'm reliant on whatever they give me through that funnel. I've no idea where it comes from, whether it's my broker's data, whether it's their data, who supplied it, the quality, but I do know it's 1 minute data, not tick. So yes, it gives you lovely reports, but so does Quant Analyzer. And I would much rather run a test, export this, place it into Quant Analyzer to get more detailed results than MT5 can produce, but knowing 100% that the garbage isn't going in. And for me, that's much more important than visual looks. You can load tick data to custom symbol. Yes, you can. Yeah. But it's a faff. Absolute faff. Pain in the arse. Every time you want to update the data, it's a pain in the arse to do it. It's just a pain. I just don't like it. But I mean, that's me. You know, I've been using MT4 all my life, and I've been using MT5 half of my life, and I can't stand the thing. But each to their own. You know, I just like when you know something works and you can verify it, there's no need for me to change. If I go to MT5, I have to learn the intricacies of it. The backtesting engine is also different. Yeah. You run the position trader EA with the same settings in MT4 and you run the same settings in MT5, you get different results because I can't control the data as well. So, but yeah, I haven't built it for MT5. I'd have to convert everything over to MT5, which is a massive job, and I'm not going to do it because it's free. It's not something I'm charging for, and it's not something I'm using. So, but if I decide to release one of the strategies that I come up with, obviously you guys will all get the first dibs on it discount. Then I will release an MT5 version of it, because around about a third of people use MT5. So, but still it should say something, shouldn't it? Over 70% of traders that use MetaTrader use MetaTrader 4. That should tell everybody something. Yeah. It's better than MT5. If it wasn't, everybody would be using MT5. I would be using MT5. MT5 has so many bugs and it's auto updated. So it introduces more bugs. They fix bugs with bugs. It's not as controllable. I can't click this button and go load a load of data from Dukascopy. Now load a load of data from DarwinX. And I can't control my testing as well that I can with this. I can say, right, Euro US dollar, go and get me the latest data from Euro US dollar. In fact, get me the latest data from all the majors. Done. I can't do this in MT5. And I can't verify it. And I can't say, actually, I'm not going to trust Dukascopy. Let's run it over FXCM and run it over DarwinX. Am I getting the same results? Yes, brilliant. I can't do that easily and quickly. And this is it. Backtesting takes forever. Yeah, it's the thing that I spend more time doing than I spend trading. I spend more time doing this than I do actually trading because I'm always looking for ways to extract money from the market. And I've been doing it for 15 odd years. I spend all my time here doing this. Trading is, I've quickly popped over to this a couple of times this morning to look at it. I don't need to sit and watch this. I enter a trade. It will go up and down over a period of time. Yeah. But if I want to find out how to make money, I need to spend all my time in here. That's why I do it. That's why I use this system, because this tick data suite gives me all of the control over my inputs into my testing. So, but it's a shame they don't have this facility in MT5. It's something that I think if they had tick data suite available for MT5, or they had their own version where I could just interact with MT5, press buttons and get things and verify it, check it with MT4, run the same test with two EAs in two different terminals and go, yeah, that's right, it matches up, I'd probably switch. But they still release bugs, yeah, like the market reverse alerts EA. Sometimes it doesn't take trades. It doesn't remove stop losses. Sometimes it does. It's a bug in MT5. Where they've patched something but haven't released in the patch notes what they've patched. They don't know what they've patched, but they know that sometimes stop losses don't get removed by certain brokers, but they can't tell me why, and I can't fix it because they can't tell me where the problem is. There's a bug, but it's a bug in their code that they introduced. They fix bugs with bugs. It's one of those things. I play a game called Star Trek Fleet Command, right? Made by a company called Scopely. Every week they do maintenance to fix bugs. And we launch it on a Tuesday, and it's a standing joke on a Tuesday. What bugs have they introduced with the bug fix? And it's the same with MT5. Yeah, every time they release a new version, they break something. And then we had 2 maintenances this week. Actually, we had 3 maintenances this week to fix bugs. So they released a maintenance upgrade on Monday. Tuesday, they had another maintenance upgrade. Wednesday, they had another maintenance upgrade to fix the bugs they introduced on Monday and Tuesday. MT5 auto pushes out bugs. That's the thing I don't like about it. And also the graphical user interface is hard to get on with because the way that it draws, it's designed for futures and stocks. So the way that it actually draws uses a much more resource hungry graphical user interface, and it only uses one core of your PC. So, you know, there's just so many issues. The name of the game is Star Trek Fleet Command. That. If you go and play that, you'll get sucked into it. I've been playing it for 1.5 years. 2 years, actually. It's just one of those games that you just get in and you stay in. Well, it is for me anyway. 3-hour exit is even better on the Aussie CAD, is it? It might be, but that's curve fitting. What you want to do is make sure that the 2-hour, the 3-hour, the 4-hour, the 5-hour all work. So the thing you've got to do is a robustness test. So yeah, robustness test the target and robustness test the time exit, wherever that is down here. So robustness test those. It does look like it doesn't work on certain instruments, and there will be a reason for that. It'll be to do with the way that they interact with the swap overnight, I would suspect. So you need to run a test on all of them. This might work on gold, actually. You know, this might be a good one to trade gold with, because a lot of these little strategies that work over the Asian session work on gold quite well. It doesn't work on gold. I'm always wary about strategies that only work on certain instruments, because with trading, what you are doing is you are applying a risk mechanism to market movement, which is random. Yeah. So your strategy is actually just a risk profile applied to price. If you find that the risk profile that you apply to price, apply to a candlestick, varies dramatically when you apply it to different types of candlestick, i.e. different instruments, that rings alarm bells. Because if it only works on Aussie CAD, Aussie New Zealand and Aussie Swiss, for example, it only worked on the Australian dollar. There's something about the Australian dollar that makes that work that may change in the future. And if applying a risk mechanism to candlesticks that look the same on the Aussie CAD as they do on the US dollar Swiss, and you know it doesn't work on the US dollar Swiss, why doesn't it work? There's always a little alarm bell that rings in my head with that type of strategy. This is why I want it to work across multiple instruments of the same ilk. So if I test something on Euro US dollar, it's got to work on Pound US dollar, definitely. And I'd like it to work on US dollar CAD as well. I want it to work on 3 US pairs because they're driven by the US. If I do a trend strategy like I did this morning that works on the CAD yen, I need it to work on the Euro yen, the Aussie yen as well, because it's the yen that I'm trading. I'm just using a cross instrument to work with it. Yeah. God, how many people play Star Trek Fleet Command in here? Look at that. Lucas plays it. CK plays it. The video button is so annoying. I know. It's a bug. Another bug they introduced. They launched a load of new stuff and they put videos up, but they put the video over the help button so you help your alliance members. You couldn't hit the button because the video button didn't go away. Stupid bugs like that. The MT5 does it, but they don't tell you what these bugs are. That's the difference. At least we know what the bugs are. But when there's a bug in MT5, you got to track it down yourself. And the only way to do that is to look at the patch notes and go, what have they changed? They haven't thought about how that affects that, have they? Which is why MT4 doesn't get updated, which is great. If you can't update it, you can't break it. That's my theory. Sorry, Mr. Gang. I like MT4 too, of course, but sometimes I have performance issue. Yeah, it's personal preference, but from a back testing perspective, you know, with back testing, I don't care what it looks like. I care about the data. That is the core, because everything you do in back testing is data driven. If you run this strategy, like let's do a test here. I'll show you the difference. We'll quickly run this test on the Aussie CAD over. I'm just going to do it over a year. just to give you a result. So we'll just get this result out, whatever it is. Doesn't matter what it is. Okay, so let me screenshot that. Just look at that bit. That'll do. Right, and now I'm going to run the same test, but I'm not going to use Bootcamp data. I'm going to use my broker's data. $8,700 with Bootcamp, 3,700 with my broker. Bootcamp took 200 trades. My broker took 50. Massive, massive difference. We'll have to see actually. May 2024. Oh, so that didn't even, the earliest trade was May 2024. It didn't take all the trades, did it? Okay. Let's do, when did that take its first trade? 29th of May 2024. We'll run a test from that period, yeah? So that's my broker. 3-7 with 50 trades. Now let's try Bootcamp. $3-9 with 52. Not much of a variance, but a variance. Yeah. So I need consistency. If I do a test in here using my broker's data, then I boot another terminal with FTMO or DarwinX or someone else and run the same test, I will get a different result. I've got to have a benchmark. That's the important bit. You just did the same thing with yen pairs. Yeah, but yen, I'm not testing yen pairs. I'm testing trending strategy. Yeah, trending strategies don't work on mean reverting pairs. So it may be a case that this strategy that you've come up with does only work on certain instruments, but those instruments have got to be correlated. So if it only works on the pound US dollar, the Aussie dollar CAD, and the New Zealand dollar yen, they've got nothing in common. If you do tests and it only works on the Aussie CAD, the Aussie New Zealand, the Aussie Swiss, and the Aussie yen, they've all got something in common, the Aussie. That's fine. I would have no problem with that. But if you have something that works on the Aussie CAD, doesn't work on the Aussie New Zealand, doesn't work on the Aussie yen, works on the Aussie Swiss, but doesn't work on the New Zealand CAD, it should do. Yeah. If it doesn't work like that, it's random. It's just a random result. So you've got to out of sample test this. That's the important thing. This is what, you know, we've gone through this in the members streams, robustness testing, how and why we do what we do. We do it to prove something to ourselves. We do it to prove that I've got this strategy over 2 years and it's profitable. I've tested it over the 2 years before that and it's profitable. I tested it before COVID. It wasn't as profitable, but it didn't lose money. Yeah, I forward tested it on a 6-month sample of data that it had never seen before and it came out with profit. I've tested it on 3 pairs, all US dollar based. They all work. I've also tested it on the hourly time frame, the 30-minute time frame, and the 4-hour time frame. The results are different, but the equity curve is smooth. That's robust. If you test it on one instrument with one pair of settings on one time frame over 6 months, it ain't going to work. So you've got to have the robustness testing there to show you and prove to you that this thing has got an edge. We're just looking for an edge. That's all we're doing. So you've got to do a full robust on it. But it's got a lot of promise. I like it. I'm just concerned about that. I just don't like the fact that anything that works over 2 hours has got so little room for movement, isn't it? There's so little room for error in it. But, you know, you can't argue with the results, can you? The equity curve looks pretty damn nice. I like it. The STFC video button, yeah. So yeah, if you're creating custom symbols, Lucas, then yeah, I mean, it's fine as long as you know you can replicate it again and again. This is the thing, you've got to be able to replicate your data. Think about you got MT5, you run a load of tests, your computer blows up, you have to reinstall MT5, redo the data. If you run the same test and you get exactly the same to the tick results, no problem. But if you suddenly go, hang on a minute, those tests are giving me different results now. There's something wrong with the data. That's the thing that concerns me. I have a benchmark to work from with MT4. That's all. That's the only reason I like it. But and this is why I love to test stuff on hourly time frames and above, because anything you do on 5 minute, there's just too much variation on brokers. Anything you do on the hourly, 4 hourly, and daily time frames, those candles are very, 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 very similar. So the margin of error in data is very, very, very marginal. So it doesn't matter too much. But yeah. Just did the CAD Swiss with 3-hour exit. It worked. Cool. Try it real tick. 3-hour CAD Swiss. Let me just load it again just to make sure, because I'm not sure if I'm up to bat with it. Uh, 3-hour. This will take a while because it's obviously running every tick. Takes off. You also want to stick this in Quant Analyzer and see how much stagnation there is. Because obviously this is trading every day, only once a day. If you've got a stagnation period of 6 to 9 months, you need to just be aware of that. So when you start running it live, you sit there and you go, this isn't making any money. You need to be aware that it's not making any money for long periods of time. So there, for example, it didn't make a penny from there until there. I don't know how long that is, but however many days, weeks, or months that is, be prepared for it not to generate any alpha. You know, it's not going to do that all the time, is it? The market conditions have got to be right. But you know, the market conditions over that, it's just there's just no time, is there? It's literally going short, out, quick. There's got to be so much luck involved in that, surely. But you know, you can't argue with the result, can you? Do more testing. Come back to me with some test results, some robustness testing on it. We'll see. Right, so that's all I've got for you today. We've been going for 2 hours, 20 minutes. Blimey. So that's a long one. Sorry for those on replay. If you've got any questions, comment section or Discord, if you're in Discord. But yeah, looks good. Doubled the account. Nice stable lot size as well. Obviously, some of these lot sizes, hang on, this is taking 4 lots. How can it be taking bigger lot sizing? Oh, we're using a lot multiplier, don't forget. So it is using a lot multiplier. So yeah, you're taking bigger lot size. 5.32 we got up to there. What's the maximum lot size we've traded? $6.44. So maximum lots it got up to was 6. But you know, it's using a stop loss, isn't it? I mean, there is a risk of ruin here, but obviously you're using a lot multiplier. It's unlikely you're going to get with a strategy like this so many losing trades. It's going to have a high strike rate all the time, isn't it? Basically 70%. So maximum losing trades you've had is 4, which is why you're up to 6.4 lots. You have to bear that in mind, but I don't think it's a problem using 1.1 on that. Right, that's but I only want one trade. It is only taking one trade, but it's using a lot multiplier, isn't it? Yeah. So a martingale lot multiplier is if the trade is a loss, it uses the multiplier. That's how martingale works. That's what that is. That setting. Look, lot multiplier for martingale trading. So if you use 4 and it doesn't work out, it will multiply the lot by 1.1. And if that doesn't work out, it will multiply the lot by 1.1. If you don't want to use martingale, set that to 1 and it will multiply the lot by 1. So if you don't use martingale and run the same test, you will get a different result. But I mean, it won't be much different. Let me just run it on control points quickly, because that takes forever on every tick. But it won't be much different. You'll still get a decent equity curve out of it, because there's not many instances where it uses the lot multiplier. Why'd that stop? Oh, it's finished. That's a big difference. That's a massive difference. The difference between using a 1.1 multiplier and using a 1 multiplier is the difference between 75 grand and 123 grand at the end of it. It's a 50 grand difference, 100% return difference. So even if I am not running the trade, it still multiplies a lot on the next trade. Yeah, that's how martingale works, isn't it? Martingale is basically a lot multiplier. So if you have a trade and the trade loses, it multiplies the next trade. If the trade wins, we go back to the original lot size. If with martingale, if you have a trade open at 1 and it pushes down and takes another trade, it will take a multiple of that for the next trade, and so on. So it works, because this is a losing trade, isn't it? Because you're still in it. It's in loss. Therefore, we need to multiply the lot. That's how martingale works. So, yeah. But that's a massive, massive difference, that equity curve, compared to using no lot multiplication. See the power of martingale. However, this isn't martingale. Yeah, if you did this, if you set that to 2, right? You're potentially $175 grand. You just made another 50k. But you took a trade at 128 lots. One more trade than that, if that other one was, if that was a loser, that one, the next one, if it lost, would have blown your account. Or maybe the next one. One of them would. So be careful. Yes. Anyway, those that play Star Trek Fleet Command, let me know what server you're on. I'm on server 106. There we go. You may even be on the same server as me. That'd be weird, isn't it? You might even be in the same alliance. Anyway, go and do some testing with that, and see where we go. Right, so I will get the trend strategy EA tidied up. I'll make sure that any inputs that aren't possible to affect it will be removed, so that you can have a quick play around with that and do some testing on it. With the lazy trader strategy, with Phil's one, I need to do some robustness testing on it, basically. So I've got most of the robustness tests done, but I need to do the out of sample robustness on it. So I'm going to play around with that a little bit more. And it's another variation of position trading to put into the portfolio, potentially. It's a pretty good strategy. The reason I like it is because it uses a TP. but I could replicate that with the ADR reversal strategy. But I kind of like the idea of having a completely different variation in there. Server 167, that's unfortunate. I'm a level 53, so 167, you're you're a younger server than me, so there you go. Right, I'll leave it there today. Anything you need, let me know in Discord. Yeah, we'll pick it up again next week. So next week, I will do a little bit more on what we've been doing in here from a testing perspective. And I've also got daily strategies that I want to test as well. But if there's anything else you want to cover in the member streams to do with just general trading, let me know. But hopefully we can start to roll some of these out, these strategies, once we've got them fully tested. But it's a long process, testing strategies, as you're probably finding out. So it's not something that is, an hour or two's work. It's weeks of work. The robustness test something, and often you get to the end of it and you go, doesn't work, or it's the same as something else, and you just end up throwing it away. Yeah, I've got plenty of profitable strategies that I've got, but they are all very, very similar to what I already do. Breakout type strategies, reversion strategies, position trading strategies. Yeah, so there's no point in running multiple versions of the same thing. Yeah, but this is a slightly different variation. This one, I like it. And obviously my pullback trend one is going to be for trending only. So that's a good one if I can get it working and robustness. So, all right, so have a good weekend. If I don't see you before, but I am back tomorrow morning for the live stream. So tomorrow morning we're on at 8 o'clock and it's a general session tomorrow. So we'll be doing whatever. So if you've got any testing you've been doing in the with any of these, bring it along. We might be able to do some of it. And all the other people can see what amazing things we're doing. But anyway, I'll let you know, and I'll get the EA to the members section soon. All right. And Sarah, contact me if you can't get your YouTube linked for any reason. I'll see if I can add you in manually. But apparently there is a way to do it, somebody said. So I'm not quite sure how, but one for Google. Have a good one. I will speak to you soon.